Hey guys, welcome back. We're going to be talking about the difference between index funds and individual stocks and which one, maybe depending on how your strategy is, that you should be investing in. So, Kirby, I'll let you open this one up. I know we both invest in both of them, but maybe you could share some differences on the two and what strategies you should be using if you're going to invest in either one.
I'll just start off with the investments that I use. I mean, how I use it. For me, so the difference between the individual stock and let's say ETF, like S&P 500, that's the one that's universally known, ETF. Um, individual stock is just an individual company. Now, understand, and I go with this mantra, any individual company can go bankrupt, but the S&P 500 is a consortium of the 503. I know it's SP 500, but it's usually about 500 to 503 stocks in there. That's a consortium of the best U.S. companies and the biggest U.S. companies in the world over. And there's, I would say there's 0% chance that all 503 of those companies will go bankrupt at the same time. So when it comes to individual stocks are more riskier because I mean, people remember the sprints back in the day, the Qualcomms and things like that. It's a whole bunch of different individual companies, but in a small, minute time frame, I'll say within like 5 or 10 years, that was the big conglomerate around there. You remember, Alex, you probably wasn't old enough, but back in the 90s, LA Gear was that was the shoe to have. Besides Nike, Nike was always there, but LA Gear, they had the little light ups on the back of the shoes and they was selling like gangbusters. When you walk, it would light up, whatever. They thought that was like big time. And then, of course, the company eventually, non-existent today. But that's why I say the risk is there. And people, most laymen, everyday people, they don't have the aptitude and the ability to research individual stocks for the most part. Of course, you can always jump on an individual stock because you heard it somewhere and say, "Hey, go buy this stock." And the funny part is, a lot of times I hear people say that they bought a stock because a friend told them about it. It's usually a stock is crap, and because it's just the ability to find the know-how to read financial statements, understand what it's doing, and things like that. But for me, even still today, and I have a lot of time on task, a lot of time researching and buying individual stocks. Still today, majority of my portfolio is in an ETF that is pegged to the S&P 500, so SPY, or the ETF that's pegged to the NASDAQ 100. And there's a lot of overlap between those two ETFs between companies, but that's the way I go. Of course, you can break down ETFs also in sectors. You got the automobile sector. You can just buy automobile stocks, or you got the planes, ETF and stuff like that. If you just want to invest in sectors, I still think that's more safer than going to an individual stock, especially if you don't have the aptitude to know how to look into it. And most people don't have the aptitude. I know somebody's probably going to hit the comment section and say, "Oh, investing in individual stocks is easy." But most people don't have the aptitude, the know-how, or the understanding how to do it. So majority of my portfolio is in the ETF space in those two ETFs. I don't sit there and try to buy a million ETFs. I just stay focused on that. So that's really the nuance of the two, one versus the other, versus if you want to be, super aggressive, or versus if you just, you don't know what you're doing, you can admit you don't know what you're doing. So I'm just going to go with the best companies that's out there. Now, as far as return, of course, that's what everybody care about, the return. Could you do the homework, have time on task, understand the company, read the financial reports, listen to the conference calls and things of that nature, and invest in individual stock, and it would return higher than the S&P 500? Yes, that is highly likely. Again, if you do all the things that I just mentioned before. But if you're just randomly going out there picking a stock and thinking that, oh, I can just put all my money here and not pay attention to it and going about life, and then it's going to outperform the S&P 500, those chances are very less than likely. So that's just the nuance for me for the different two. Alex, what you got on there?
Yeah, it's the same with me. I mean, the majority of my portfolio is in ETFs, mostly the S&P 500. Um, and then I do have, um, holdings in the NASDAQ as well. But for me, it's just a matter of trying not to gamble where the economy or where a specific company is going to be 40, 50 years from now. So,
Right.
um, for some of, my positions, it's like for retirement or whatever, those are just in NASDAQ, S&P 500. As you know, I'm working towards a strategy of getting 100 shares of the S&P so I could sell options on it. That's more for income, but also because the S&P is like you've explained, a stable stock to own. Um, for individual stocks, like you said, you really got to research those companies. You have to know every in and out about the company. You've got to know their financials. You've got to know their history, who's, the CEO, everything. Everything goes into understanding what an individual stock or company is. And like Warren Buffett explains too, if you're going to buy individual stocks, you want to be invested in the companies that have little to no competition. You want to be investing in the top companies in that sector, not trying to gamble with a new company that has this new exotic like technology or whatever. Just go with the ones that have already proven to be successful. Because let's just say with like AI, there's a stock C3 AI that, deals with AI, but now Facebook is getting into AI and Amazon and Apple. So it's like these bigger companies that have already existed are getting involved with that. So which one do you think will actually run the game with it? So it's just a matter of, you know, being very specific with how you're investing in these stocks and understanding them completely. And the other thing that I do, and I'm sure you do too, is like investing in ETFs for building capital to purchase real estate because it's the most, stable way to go. You don't want to be having your money in a single stock and then, earnings comes out and then they drop 40% and you've been counting on that money for, buying the next property. So investing in ETFs for that to build capital towards a next purchase, another investment is also what I do and what I know what you do as well. So
Right. Going back to that the AI comment you made. I remember, and it's a shameless plug for everybody, anybody that want to join the Discord. It's free. Just look in the comment section. Just click the link to join the Discord that we have, and we talk about stocks, real estate, and everything finance. But I remember talking about it in the Discord, especially when AI, especially that C3 AI came out, and everybody's looking to see what's the AI company that's going to be the leader in it. And you know me, I'm always the mindset take a step back. Okay, there's going to be a lot of people in the space, and you just named a few. You named C3 AI, Google, Apple, Facebook. All of these people are transitioning into the AI space. And then, like you said, the C3 AI is at the infancy and it's a pure AI play. But these other companies, especially like i.e. Apple, they have all the capital in the world to go buy up these these little AI companies to, you know, expedite their existence into the AI space.
yep,
But I'm always of the mindset of either if you want to play the AI sector, go to the AI ETF or take a step back. What is one thing that every AI company need? Chips. So then you talk about Taiwan Semi. We talked about NVIDIA. In the Discord, we talked about NVIDIA when NVIDIA was at $100 pre-split. Then it ran up to $1,200, and then now it's split, and then now it's at like 130 or something as at the time of this video. But just for people that's wondering in Discord, we talk about those different things, putting different ideas and concepts out there. And you can ask any question 24/7. You'll get a reply. You can type it in the chat room, and then you'll get a reply. And then usually every week or so, we'll do a live chat where you can ask questions also. So if you got time, like I said, it's in the comment section. Click and subscribe to the Discord. Join in. It's growing slowly but surely. I think we're about 25% of people joined the class in the last week or so. But welcome everybody to join. It's free. There's no cost to you. So it's just something else we want to add in. So because me and Alex like to talk about finance all the time, so might as well build a community around it. But yeah, but like you're saying, it's all about the nuances and know-hows. It's all about the nuances and know-hows, and that's the thing. Everybody want that hot stock. Everybody want that 1,000% gainer. But a baseball game could be won by just hitting singles. If you get in a compound return of 9 to 13% a year, you can still win in the end instead of keep trying to gamble and find that one stock that's going to shoot up 100% or try to find the next GameStop and you blowing your money trying to time that perfectly. When if you look at a chart of the SPY over the last 100 years, it starts at the bottom left, which is the lowest number, and currently right now it's at an all-time high over 100 years, and it's been doing that. And think what we had in that time. We had World War II, we had Vietnam, we had Desert Storm, we had the 20-year war in Afghanistan and Iraq, dual wars. We had the financial crisis. We had COVID. Still today, the S&P 500 sits at all-time high. Nasdaq has a shorter lifespan, but right now the Nasdaq 100 sits at an all-time high. So that's the way. That's the more for sure way to do it. And then the last thing I want to touch on, I know you have something else. I know people are going to sit there and say, and it's probably a whole nother video, so stop me if you think this is a whole nother video. When you brought up the whole invest in stocks to buy real estate, people say, oh, that's crazy, don't do that because you have to time the market to do it. That's really not the case. The case is just to store capital, store capital, store capital. Will the S&P 500 go up and down? Yeah. Could the S&P 500 drop 20%? Yeah. But understand, it's more than just, oh, we just gonna blindly put money in here, and then when we're ready to buy a house, that money is going to be right. It's always a nuance to it. We're not just putting enough money in there just to, okay, we're gonna put $10,000 in here, hope it grows to $40,000 so we can buy a property in a $200,000 range, XYZ. We just keep storing capital there. When the market's up and you see an opportunity, then you execute. When the market is down, we put more money into the S&P 500 to get more shares to accumulate. Let that play around. When the deal comes, we still store money other places, but when the deal comes, then we execute. That's what it is. But it's a nuance and a methodology around it. But it's not just blindly, oh, let's just throw all the money in here and just go buy real estate when it goes up. That's not the game playing with that. It's just trying to find alpha for our money instead of having to sit in the bank account doing nothing to make things happen. But Alex, what you got? Just wanted to point out that
Yeah,
nuance of it.
no, those are good points, and especially the points you made on like us being in several wars and the stock market still performed. Especially when you mentioned the dual war in Iraq and Afghanistan and a recession at the same time, and the stock market still performed. So and it's funny because people that are new to the game will start questioning, well, what about the war in Ukraine? So there's a war that affects us 0%, and we went through two wars and a recession, and we still outperformed. So. Those are just things to think about. I mean, stop listening to what people are saying on the street and whatever, and like actually just look at the market and the economy of the United States. But with all that being said, guys, if you like the video, hit the like button. Don't forget to share this video, subscribe, leave a comment down below, and check out the Discord link like Kirby was mentioning. We'll see you guys in the next one.